Will rising geopolitical risk push oil even higher from here, or is it priced in now? Let's ask Andy Lipow, president of Lipow Oil Associates. Andy, welcome to you. What's your gut say?
Well, I think a lot of it has been priced in. We always see the oil market with its knee-jerk reaction to events in the Middle East. But as of now, there still has been no supply disruption. And the greatest fear is that Iran gets dragged into the conflict and results in either their oil being taken off the market or the Strait of Hormuz being closed.
All right. So if you think that this is kind of it's interesting how lately when I talk to specialists in their sectors, you on energy, people in the treasury markets, they all say these moves are overdone. And yet sometimes they keep on going.
Well, we've seen other things happening in the oil market, namely that the U.S. has sanctioned a number of vessels that were carrying Russian oil, and that's leading the oil market to think that perhaps we'll take a stricter line towards those tankers. In addition, the market thinks that perhaps we will take a stricter view of the sanctions on Iran because Iran has increased their exports to over 2 million barrels a day. And the administration is really looking the other way because they're so focused on gasoline prices. And this is also happening at the same time that the Department of Energy is now issuing solicitations to purchase oil to refill the Strategic Petroleum Reserve.
Right. I think the key stat here is you say the loss of 2 million barrels a day, let's say from Iran, would increase prices $10 to $14 per barrel or 25 to 35 cents at the gas pump. So a hit, but you wonder if it's a hit worth taking given everything that's happened.
Well, I think we have to look at it in a bigger context that if Iranian oil was taken off the market, what kind of retaliation steps would they take? Would they start to seize vessels transiting in the strait? Or would they try to actually shut down all of the oil transiting? And much of the exports from Saudi Arabia, Kuwait, and Iraq are transiting through that strait as well. So you could see a much wider conflict developing if Iran lost its access completely to the oil markets. That's why I think the probability is quite low that the strait would be shut down.
Right. So then that leaves us back with, possibly range-bound oil. And also, what would you say is the dollar amount of geopolitical premium that's probably in the price per barrel right now?
Right now, I think it's about $5 a barrel is the premium in there. I think that when we look around the world, oil demand continues to increase. We've seen the forecast from not only the International Energy Agency, but OPEC suggesting higher demand is ahead. And this is happening at the same time that OPEC Plus continues with its production cuts, most notably the voluntary production cuts from Saudi Arabia and Russia, which I believe are going to continue into 2024.
All right. Andy is always able to kind of gauge things out for us. At a time like this, we really appreciate it. Thank you.
Thank you.
Andy Lipow with Lipow Oil Associates.